You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon and welcome back. Today is Wednesday, 10th day of October, 2018. Big Red Radio Day. Well, glad to have you with us. Thanks for joining, whoever you are, wherever you are. We're just glad you're here now. I've got a chart of the S&P 500. If you're returning, you know what to do. If you're here for the first time, a special welcome. Glad to have you all. Go to our homepage at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered through the end of the month. You only have to register once per month. And while you're at it, go to youtube.com/CFRN/live. Bookmark that page because we do a dual stream. You'll always have one-click access to the show. Well, the chart I have up, I guess a picture paints how many points? 46. Yeah, that's kind of what it looks like. 46 on the cash market. In a little bit of news, we have Circle, revealing a slew of initiatives that it's been working on. The payment processor turned cryptocurrency incubator has launched Circle Research, a service dedicated to original analysis of all things crypto. In this respect, they're following the lead of BitMEX, whose research offshoot has proven to be hugely influential. In crypto markets, reliable information is difficult to come by, according to Circle. At Circle Research, we want to provide you with the right information so you don't have to put in the hours of legwork separating fact from fiction. Our easily readable yet in-depth primers outline key details, features, risks, and challenges associated with crypto assets. The quality of research within the crypto space has improved significantly within the last 12 months, much of it delivered in the form of email newsletters. Deer's weekly dispatches have become essential reading for many crypto enthusiasts. Last week, their head analyst, Larry Samak, left to take up a similar position at The Block. On Tuesday, yesterday, Circle also shared details of a new mobile iOS and Android app for the Poloniex exchange. The improved app includes a better mobile-based identity verification and login process. Circle shared some of the progress it's made since taking over. This includes reducing the backlog of support tickets at Poloniex by 97%, freeing up $12 million in trapped funds and returning them to customers' wallets. Remy and Horizon are two separate cryptocurrency projects that share one thing in common: masternodes. Both have announced major initiatives this week, led by Distributed Public Key Infrastructure Protocol, REM, which has started accepting applications for its masternode program. Masternodes will provide consistency and fault tolerance on REM's custom public blockchain, as well as signing transactions for certificate issuance and revocation. They aim to steer businesses away from using passwords in favor of PKI certificates. Their quest has been significantly aided by all the scare stories about weak passwords regularly appearing in mainstream media. Horizon, meanwhile, will be deprecating its old software today, October 10th, and has urged miners, node operators, exchanges, and Swing wallet users to upgrade now. The main change introduced is an update to the Bitcoin Core consensus algorithm that the proof-of-work cryptocurrency has been using. Horizon, then operating under the name of Zencash, was 51% attacked earlier this year, and the new consensus change has been designed to prevent a repeat accident. Google Plus. You've been to our blog. You've seen it in all its glory. And now the man wants to take it down. I'm not kidding. Let me tell you all about it, if you haven't heard. And you probably have. It's, you know, it's a big window. The tech world was rocked by another private scandal Monday, this time on an unexpected platform. Google dominates many areas of our online lives, and Google Plus was its attempt to break into social media, but it was seen as one of Google's biggest failures. Now it has an unhappy ending. Well, we had a good time with Google Plus, and it's not over. The Wall Street Journal reported Monday that the data of hundreds of thousands of Google Plus users had been left exposed over 3 years from 2015 to this March. Not only that, but Google decided against informing the public about the vulnerability. Now, that seems un-Googlish. In the wake of the Journal story, Google announced it would shut down Google Plus as a consumer proposition for good. Some observers online were surprised to hear it still existed. But the writing has been on the wall for some time. You need only look at how Google's top executives have stopped using Google Plus to see it was in fact an unloved child. Google Plus was once the go-to platform for the latest pronouncements of Google's senior managers, but some went silent on the social network about 3 years ago. Here's why Google's top team stopped using it. Larry Page does not appear to have posted on his Google Plus page since August 21st of 2015. Page shared a post from his Google co-founder Sergey Brin announcing a project to put computing inside a contact lens. Very excited about these health efforts also, Page added. Sundar last posted in March of 2016. And Eric Schmidt, the former CEO and executive chairman, has not posted since February of 2017. His swan song post was an article about the writer Jane Jacobs and urban planning. Well, they're boring everybody to death, so that's maybe why nobody's using it. Of all the big cheeses, Sergey seems to be the last to have abandoned Google Plus, posting just over a year ago about the ragged islands in the Bahamas taking the brunt of Hurricane Irma. Like Page, Brin is relatively quiet on social media. Now, no longer a consumer product, word is it will be rolled into more of a Slack type product. It'll be for collaboration, for companies, for teams, for groups who are collaborating on different projects. And so it's not completely going away, which means we'll still be there. And what we post on Google Plus, and boy, I gotta get a hold of somebody and figure out what happens to all that stuff. Hopefully it will just roll into the new product, but there's no guarantees. There's literally thousands upon thousands of hours of video and articles. I'm more concerned about the articles than the videos, because the videos are on YouTube as well. So, and YouTube's definitely not going anywhere. Let's take a look at the numbers from around the world. See how they fare. Okay. I've been informed that I need to close some windows. So let's shut them down. Really must have a lot open. That might be the first time I got that warning. And the little snap guy pops up. Alright, these are cash markets. We'll get to the futures shortly. In the US, the Dow is currently down 338 points. That's 1.25%. It's been down as much as 400 at one point. NASDAQ down 152. S&P down 38. And the Russell 2000 down 20. Now that puts the NASDAQ down almost 2%, and everything else is down about 1.25%. In the commodity basket, crude oil down $1.75, that's over 2%, trading 73.21 last. Gold up 80 cents, trading 1192.30 last. The Asian markets, the Nikkei closed positive, up 36 points. Shanghai was positive, up 5 points. And the Hang Seng was positive, up 20 points. Small numbers for the Hang Seng, but positive nonetheless. And it was a red day in Europe. The FTSE closed down 91 points, over 1%. The DAX was down 264 points, that's over 2%. and the CAC was down 112. That's over 2%. So, green day by a slim margin in Asia. Definitely a red day in Europe, and definitely a red day here at home. But the VIX is green, gold is green, nat gas is green, and that's about it. Let's go to Michael and get a recap of everything that happened in the live trading room today. And then we'll be back. We'll chat with John. We'll take a look at the Concierge Trade Alerts, and we'll see how much damage this sell-off has done and if the worst is over. Michael, are you there?
I am here.
How are you?
I am okay. My phone is still messed up though. That's why I've been responding to you in the channel.
What happened to it? Did you drop it, or?
Yeah, it got dropped into some water, and
Did you put it in the
bag of rice?
Yeah.
I actually did do that, and then when I went to plug it up after it came back to life, there was rice jammed in in the thing where
you
I
missed
plug
the
it.
part where you're supposed to put the phone inside of like a woman's nylon stocking.
Ah, yes, I must have totally missed that.
That's so you don't get little grains of rice up in the
all the places you don't want them.
Yeah, all those places. Yeah. I'm sorry, I didn't tell you about that part.
Ah, yeah. Well,
all right.
I learned it the hard way.
And so it's still not working?
It doesn't work when I'm here for some reason. Like right now, it's got no service. It says no service. I tried texting you the last couple days. Let me go and see. Messages to Dwayne. The last one. Not delivered, not delivered, not delivered, not delivered. So it looks like Friday. Friday was the last time anything was delivered to you from my phone. That's what it looks like. That's all the other things that I tried to text to you.
Yeah, every now and then I'll get one of those not delivered, but
I get them all the time.
I guess because you're using your Wi-Fi when you're there?
No, I'm not actually using my Wi-Fi.
Oh.
I was using my Wi-Fi, but that wasn't working either. So I need to get a new phone.
Google came out with a new phone today, the Pixel something or other.
Yeah, Jake's got a Pixel 2.
I think this was I guess this is the 3.
And his is waterproof.
Really? That's kind of neat.
Yeah.
All right, I will. Was there any other big news this morning, or any reason behind the sell-off? I saw one headline that said, "The markets are down today because everybody's scared of something, but no one seems to know what."
Well, it's kind of like what John was saying last week on Friday, I think. When we were doing the show on Friday, he was saying, things are setting up for a big fall.
Let me hit mute, and I'll talk to you here in a minute, okay? I got somebody at my door.
Okay, all right. I got it. All right. Good afternoon, everybody. Today is the 10th day of October, 2018. Let's see, spreadsheet. Let me get the spreadsheet out. Spreadsheet. First, if you have not taken a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that or any of these other places where it says 5-day free trial, click on them, you will eventually be brought to this page. On this page, all we ask for is your email, your first name, how you found us. You hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay? Okay. So we had a pretty good day today in the room. As I said, today's the 10th day of October, 2018. If you're going to read this, you got to read all the CFTC risk disclosures down at the bottom. Today, 6 ticks in the euro, 3 ticks in crude, 14 ticks in gold, and 8 ticks on the ES. That put us at 307.50 on the morning. Today it took 20 minutes and 1 trade to get to the goal for the day. At that point, we were up $100 per contract. Hang on. Yeah, okay. We were up $100 per contract. We took a total of 9 trade opportunities this morning. Today is the 8th day of the month, and so far this month we're up $1,870. That's averaging $233 per day. On On the year now, we're up 27,270. That's over 187 days, averaging 145 per day. 145 per day. Okay, now let's get into what actually transpired. Okay, we missed a shorting opportunity right here. Then we grabbed a long right here on gold. Yeah, we grabbed a long right there on gold. And we picked up yeah, what did we pick up on that? The long on gold. We picked up 10 ticks on that one. Then right over here, we grabbed a short and we picked up 4 ticks on that. And then right here, we had nothing. We had nothing there. Okay, and that was it. We got a break even over there. Right in here, we didn't get anything. Right in there, we didn't get anything. I don't know. All right, and that was all of that. So that was our gold. We ended with plus 14 ticks on gold. Plus 14 ticks on the gold. Yeah. Okay. I'm not sure what's going on there. Okay, on this one, the euro, we started out over here, picked up 6 ticks right there. Then we had a mistrade right there that would have given us some profit. I don't know how much, but it would have given us some profit. And over here, we had a break even. Then right in here, this was during the break. There was a bounce off the BBC. It went and gave some profit. Over here, there was another one right there going into the high of the day. That would have been a momentum long trade right in there. Okay. And that was it. That was it. We picked up 6 ticks on the euro today. Crude oil. On crude, there was a lot of movement here in crude today. We ended up only picking up 3 ticks because we had to stop out right here. We stopped out there, minus 8 ticks, and then we got 11 ticks right here to get back to plus 3. Then it got choppy, and then it just started moving, but the slingshot was all messed up, so there wasn't anything we could do in there. We got all the way over here, and we got to bounce off the BBC right there for a shorting opportunity. Okay, for a shorting opportunity. And that was it. And that was it. Okay. All right. So we ended up with plus 3 on crude today. And on the ES, let's see. We had, scroll all the way back here. We had just a couple of trade opportunities on the ES. Okay, we had a short right here. That went for 8 ticks. Hang on. We had 8 ticks there. And there was another short right in here that we missed. It looks like there was probably a long right in here, but we weren't trending, so I didn't do anything with it. Then a short in here that we missed, that would have been a break even. A long in here that we missed. Also would have been a break even. Okay, I'm trying to scroll right now, but it's not letting me. Hang on. Hang on. Okay, and we had a break even right there. Okay, and that was it. Right in here during the break, there was a long opportunity right here that went nicely. Another one right there. And then we switched directions and we had a drop right there that went well. And over here, a long right there that went well. And a short right in there that went well. This was all during the break. There was a lot of movement here during the break. There was another long right in here that worked out well. And there's a short right now. That's, well, we're waiting to see if it's going to work. But there was a lot of movement there during the break on the ES. Okay. Now, let's go back here to our spreadsheet. And here we go. Okay. if you have not taken a free trial with us, go to the homepage at CFRN.net. Over here on the side, it says apply.cfrn.net. Click on that, or you can click down here where it says free 5-day trial. Either one, and you'll be brought here to this page where all we ask for is your email, your first name, how you found us. Click the submit button. Okay. Sorry, there's a little fly in front of me. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Now, also, can somebody post something in here? Just anything? Yes. Why? And in anything, so I can get put out the link to the meeting this afternoon. The meeting this afternoon. Here we go. This meeting is at 1:15 this afternoon, and I will be going over other trade setups that we don't do in the room in the morning. Here is the link for it. That is at 1:15 p.m. EDT. I'll hit send to all. Okay. Okay. And that's it. Well, let me go over the spreadsheet. Go over the spreadsheet again. On the spreadsheet, as I said, today's the 10th day of October 2018. If I'm sorry. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. We made 6 ticks on the euro, 3 ticks on crude, 14 ticks on gold, and 8 ticks on the ES. Put us at 307.50. That's one contract this morning. Today it took 20 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 contract, and we took a total of 9 trade opportunities. Gross profit on the month right now, $1,870. That's over 8 days, averaging $233 per day. Gross profit on the year, $27,270. That's over 187 days, averaging $145 per day. Okay. Okay. And with that, we can pass it back out. Well, I don't know if we can. I don't know if Dwayne's back yet.
Yeah, I'm back.
Oh, okay. Good. Good. All right. And John's here too.
Okay, great. Yeah, I told him we'd be ready in just a few minutes, so
okay,
that's great. Good. Okay. Charts are back.
How much was
recap of the recap.
today? It took 20 minutes and 1 trade to get the goal for the day. That was on the ES. 8 ticks in our first trade.
Good job. Oh, did you hear about that one group? That thing they did on the ES last night on the Emini contracts. Yeah.
Tell me about it.
Some guy sent an email out and told a whole bunch of people that they should get short the S&P at 2872. We're trying to figure out how he how he knew this.
Yeah. That guy.
Yeah, that guy. He's a bad hombre. Anyway, for a lot of reasons. Swing low. 2837. Yeah. Just so I don't have to burn too many brain cycles from 72 to 42. That's 30 points. That's a pretty good little move. Just kidding, guys. It's just a concierge trade alert. Just another day at the office. That's all. No biggie. What's the true math? 72 minus 38. 72 minus 38. 34. 34 S&P points. That's a nice little move. Now, I assume you were trading the S&P short this morning?
Yes. Yes, I had 2 short trades on it this morning. There were a bunch of opportunities during the break, though. But, yeah, I had 1 break even and 1 plus 8.
So 34 points in the S&P. If you got out at the exact swing low, which no one did, it's $1,700 per contract available. That's the numbers. And I guess most of it took, well, we'll give it 30, 60, 90, 2 hours. What time did it start? Right here. Oh, it's right off the open. Okay. So they sold the open, and I mean, London was just, it was sleepy time when London opened. Boy, but Wall Street opened at the bottom. So I'm curious to hear John's thoughts on if this is it. Have we seen the capitulation?
You want me to open up his mic?
Yeah, let's go ahead and do that.
Okay. Your mic is open, John.
John, welcome to the show. Okay. I had told him about 10 minutes, so he might have just got logged in.
Okay.
So the S&P fell 34 points. Now the Dow was down 400 points. These are still last week's zones, guys. On the Dow, last night's email said to consider selling 26,325. 26.
Oh, Rick. I talked to Les a couple of times.
There he is.
I'm telling you, my read of this, Frank, is we gotta...
I just muted him again.
Yeah, I guess he'll jingle my phone when he's ready.
Okay.
So 26,325. That's pretty close. And the swing low, well, that's 300 points, give or take. Nope, that was not him. 300 at $5 a point. If you got out somewhere under the swing low. And to just give you an idea, this number here was again 26,325. So let's see if we have an exit signal yet. Not yet. Although we can see, you know, it's very visible. Price is falling, 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 and you don't want to try to catch a falling knife, as they say. What do we start to do here? We start to walk sideways, and the candles themselves change. They become there's a term for that doji with the fat body there. John might know it. And we get two of those. We get a red one, we get a green one, and we may not be done to the downside. We will consider it done here when the step line hooks a turn and gets on the other side of the CFMA1 and then manages to close green above the step line. It won't happen in a flash, it won't happen in an instant, it won't happen in a minute. So you don't have to bite your nails, just wait for it to happen. You could literally hire someone at the new minimum wage of $15 an hour, and their instructions are simply to stare at this screen until what I just said happens. Step line walks across. Step line's got to go across first, okay? Step line's got to cross, then you need a green candle that closes above the step line. That's the official exit signal. Key to get out anywhere along the way? You can. When it starts walking sideways and you figure, well, it's inevitable, we've sold off 300 points, I don't think we're going much lower, you know, and the exit signal is probably going to be, you know, up over here somewhere. Yeah, maybe I'll just take my shekels and go. You can do that. It's your trading business, and you can absolutely do that, because the bottom line is waiting for the exit signal. Could add another 100 points. It might add no extra points. You may give up some considerably. You know, if you had 300, you know, here's a scenario. You've got 300 points. You're going to look at your options, and I don't mean those kind of options. The options either stay in or get out. If you knew that one of two things would happen, that you would give up 100 points or add 100 points, and that's all you had to work with. You know, the wizard tells you if you stay in this trade, you're either going to give back 100 of the 300, or the 300 is going to turn into 400. What do you think would be the correct decision, Michael? Just in your opinion, and there's no right or wrong answer.
I would look at the overall trend of the market and see which way it's going. See if we have.
Well, see, first we got to kidnap the wizard.
Yeah.
Throw him in the van,
the
you know, in our 18 van. You know.
Mm-hmm.
I pity the fool that can pick a market like that. Because we're gonna kidnap you. No. So what do you think? I mean, what's the, because it's not every day that you get. I mean, we had, what was it, last week, where the market, up until the week of the Fed announcement, up until the Fed, we had something like a 17-point range.
Yeah.
For the week.
Yeah, today we've got a huge range today.
Yeah. Now tomorrow, we very well could have a quiet day. That often happens after a big day like this. We get a day of consolidation. No promises, no guarantees, but could be. All right. So it's 300 there. On the Russell was looking the weakest of all early on, and it seems like it may have fell the least. Now let me just jump back here. Where did we kind of slow down? 28.41. So we've not taken out the lowest weekly trading zone. In fact, I'll just leave it at that. We haven't. On the Dow, 26054, we've still got one more zone to go in the Dow for this week. Now the Russell, last night's email said to consider selling 1618. That's going to be right about there. 1618. And the swing low is 1599.5. So we'll just call it 18. 18 times $50 a point would be $900 per contract available. If you got out at the exact swing low or close, and you only get out at the swing low by accident because you don't know it's going to be the swing low until after it's the swing low. Now, for those of you who are partners or passport holders, you can see that we had a bearish cross back yesterday at 3 o'clock in the afternoon. We had a head fake to the upside, which if you were looking at a little larger time frame, you would not have gotten. Well, bullish cross, price pulls away. Actually, after the cross, yeah, you could argue some pull away maybe on that candle. But my whole point is, we come back, we look for a down close, and besides, this is on a 30-minute, not on the range chart. And there's your doji, which turns it up and gives you a green close, but the step line has already indicated that. And so we just kind of bump and grind until Okay, this started at 7:30. You show that at 7:30? I could have the time off on this chart. But I show the sell-off.
7:30 for you on the Russell.
No, so it would be 7:30 Eastern.
Oh, okay. Hang on. Let me get out my Russell chart.
Because if so, then what I had suspected that the Russell might lead the way down, it did. Because the S&P didn't kick it in gear until 9:30. And see, the Russell's still falling. So if it led to the downside, it may continue to lead.
Yeah, it's on a smaller time frame. Even at about 8 o'clock was the first actual trade set up on a smaller time frame. But it did start going down at 7:30. It started going down.
Now, guys, when you get the email and it says consider selling 1618, what additional work do you have to do? What additional tools or things do you need to have in your employ? Nothing. I mean, you got to have an account. You got to have a platform. You got to have some funds, of course, in the account. But as far as the exit signal goes, no exit signal. Certainly don't have one on the S&P either. And as soon as one of the indices gives you a good exit signal, the others will typically follow suit. And so, I mean, we have a red candle. So let's say you're in this trade, you got your email, you sold 28.72, and as it continued to drop, you were amazed and tempted to just take your money and run, but you didn't. You sat there, and now we've had the step line turned down, and we're printing a red candle. Could this go further? Well, we've still got one weekly trading zone left below us. Now, these are all last week. This is last week's lowest weekly trading zone for the S&P. I don't put all the zones out until Thursday for the general audience, but given the severity of the situation here, and for you being a loyal listener, it's 28.16/17. Now that's the only zone on this chart right now that is this week's zone. Partners get them Monday morning before Wall Street opens. That's the John call.
Okay.
So if you want to click him on.
Sure, I'll get
So
it.
you see, guys, I mean, you're sitting on a nice trade here. They don't come along every day. So while you don't want to try to wring the last tick out of it and cause yourself grief, if it's going to continue to fall and you're in the position, well, you would want to, in fact, this may sound crazy, but if a candle closed below these lows, if we had a red candle close below those lows, I would suggest adding to the position until the dynamic changes, until everything I just explained. Step line hooks are right. You don't necessarily have to wait with what you added. You don't have to wait for the exit signal. You don't have to wait for it at all. You can do. Now see, that red candle turned doji. Hey John, welcome to the show.
Hi there, how you doing?
Good, how about you?
Thanks.
You
Thanks
okay?
for the invite. Today, well, you remember what I was saying yesterday about the VIXs being, acting pretty bullish.
Yes.
A breakout over 30 would result in further upside. We put in a kind of a high up near 32, and we came back down to 30.70, 30.65 a short while ago. Got another buy signal there. It's rallied back to 31.30. I think we're putting in a little bit of a top here. If we're going to get a rally, it's probably going to happen right about now. And
Are we talking VIX or VXX?
No, sorry, a rally in the equities in the indices. So You know, we've had a few attempts, but they kind of failed. But the whole thing is changing. Incidentally, we had a huge, it was kind of a weird day. The golds opened down and it sold off, and opened down and sold off. Actually, Newmont opened sharply higher, and that sold off and came down and came back all the way up. I mean, there's still, there's still a slight risk, or maybe 5 or 10% risk of one more leg down in the gold stocks. You can't rule it out. But things are changing.
XX on a daily, John.
Oh, okay, great. So obviously we've got a pretty big. Look at the way it took out those negative. Negative reversal yesterday. This normally that's. If you look at the previous fixes, every time we've had red, it's usually gone down again, right? So this is not acting totally differently now. We're in a whole new world, and I really don't know where to start today because there's so many things going on. But let's start with the equities, because that's the big deal at the moment. Sometimes it takes a mega storm to create this sort of panic. The 1987 crash, there was a huge storm in England, in London, that happened on the Monday, October the 19th. We got this mega storm today, so the chips were down from the open, really. And I warn people today, in a bear market, in a correction, we talked about this yesterday, the market's kind of gone upside down, where we kept on seeing things going higher every day, almost inexplicably at times. We had higher opens and higher trading. Now we got lower opens and lower trading, or higher opens and selling off, like we did with Tesla this morning. Tesla kind of looks a bit stronger than everything else, and that next thing you know, it's down $15 or so. So there's almost no exceptions to the downside today. Look, it's not the end of the world by any means. We're only down a few hundred points in a lot of these indices. We're down quite a bit in the Dow, obviously, but it was only a week ago on this show where we talked about October the 1st and 2nd being the highs of the high of this bull market. Sure, which, by the way, is 9 years in the making. So we called the bottom, and we so far have called the top. Almost to the hour again. So it's amazing how much the market has actually unraveled in a week, in just over a week. So my fear is that the panic hasn't really set in yet. There's a little bit of panic selling today, but we're starting to get a rally like I thought we would, and actually this could turn out to be quite a decent rally here. So, and but here's what I think could happen. We may actually rally into the afternoon. I'm not, I wouldn't necessarily say we close on the lows today. We could, but the problem is we've got to get through Thursday and Friday. And what we've got to watch for is how Thursday, the second half of Thursday, tomorrow afternoon, turns out. Because if we have a rally in the morning, maybe a little bit different from today, maybe we do the opposite and maybe have a bit of a rebound tomorrow, and then start selling in the afternoon, like we did yesterday. Then we're probably gonna have a problem. Because if we go into Friday and we're down 200, 300, 400 Dow points or more, then you're really setting up for another 87 lookalike. Now, obviously, they prevented the first one this week by having that Monday rally. But here's the problem: we're getting more into October. If we go, if we're down, 700 points on the Dow by the end of the week, or 1,000 points, it's not going to make very good press, and it could potentially set us up for a gap down opening next Monday, and then and that could be the real 87 scenario. And here's the clincher. you know, say we get a down opening Monday, we have a very bad day, we have an even worse Tuesday, possibly followed by a big reversal, much the same as we did in the first week of February off that first Tuesday. And we might rally the Wednesday and Thursday, but guess what? October the 19th is Friday, which is the anniversary of the crash. And there's a pretty good chance we could do a repeat of that first week in February, where we actually went lower on that second Friday, on that first Friday. So that would be, you know, and then we might have a late reversal on the Friday, like we did in the first week of February, and actually start a rally the following week. But I think from a trading standpoint, the next few weeks are going to be absolutely phenomenal, because they're going to be very, very big moves in stocks and very tradable moves in indices, just like you've done overnight, as usual. Great trade.
Well, thank you very much. When I was working on the zones Sunday night, and I commented on it Monday, based upon, you know, the distance we have between our lowest weekly zone and our highest weekly zone, I've seen it shrink a little bit over the last couple of weeks. An average is about 100 from the lowest zone to the highest zone. But this week we were more like 170 points from the lowest to the highest weekly zone, which in turn tells me we're going to have some pretty big volatility. And it's
absolutely. And the look, I mean, you know, there is a really big risk of another 87. I mean, you just have to be. You know, in terms of percentages, I mean, we could really have a 10 or a 20%er, or even more, and you just have to be, you know, be great if we don't, but you have to think in those terms. So, you know, you don't want to be caught long something that's, you know, potentially vulnerable to going down, because it could be catastrophic, and even holding stuff overnight could be risky. So but I think beyond this, there'll be even better opportunities, because, you know, probably in the final 2 weeks of October, there'll be a lot of up and down ahead of the midterms. If the midterms, I think even after the midterms, even no matter what the result is, just the certainty of it could produce a rally in the market. And if the Republicans hold everything, that would be probably a huge rally into the end of the year, very similar to the Trump win in 2016. If they lose the House, you know, that's not necessarily the end of the world as far as the market is concerned, because the market likes, you know, at least one of the bodies, one of the House or the Senate to be opposite from the White House. That tends to be good for stocks. So all in all, there's still even after this correction, there's still the likelihood of, as we've talked about, you know, several months ago, the likelihood of another rally into next year. And remember, we've got a presidential third year that can often be very, very big. You know, can be 50% upwards in a market
based on historical.
Exactly. So, you know, the more we come off you know, wherever we end up this year and where we might go next year, you have to be pretty up. You know, you have to. We've been cheated out of the last 2 third years during the Obama reign, and so the likelihood of having a strong third year in this era is very high indeed. Now, I probably should have started with this earlier, but look, all of the goals after opening down this morning have turned positive. This is very, very bullish now. This is the bottom is probably in on the goals, and the dollar.
Wouldn't you have expected a stronger reaction in gold?
Well, this is the head fake. In a way, I rather prefer this, because it sort of made the bottom even stronger, and it's starting to really shape up right now. You've got a kind of a really outstanding head and shoulders reversal developing on just about all the gold stocks, and the GOLD in particular looks extremely bullish here. And the dollar is making new lows. Now, it's very interesting to me that this dollar has finally broken yesterday from the highs. You know, made a nominal new high and immediately failed, made a very big reversal, key reversal. It's down again today. We're just about to break 95, which is a very big deal. You know, and here's why I'm going more the 87 route, is because the dollar is the missing ingredient to the current situation to make it more like 87. In other words, you got the higher interest rates, you got the overvalued market, and you know, you've got now you've got you know, developing bear market with bonds still going lower. Effectively, they're hardly rallying, these bonds, so that's still, you know, creating the nervousness in stocks. All you need now is a dollar. If the dollar suddenly starts losing a point tomorrow, maybe, or Friday, and then starts plunging next week, then you've got a, you know, then you got a real 87 situation on your hands, and that's you know, and some of the old timers are going to remember that. So it's you know, that, I mean, I'm happy the dollar's topped out, because in the longer term, a weaker dollar is going to be bullish for stocks. So you know, and I think, you know, really that's been part of the problem with this whole gold thing. The Fed, you know, in 2005, remember, when the Fed started raising rates, the dollar was you know, only halfway down to its lows from the 2001 top. So when the Fed started raising rates and the dollar went down into the 2009 bottom, the you know, the gold basically doubled over the next couple of years. So we're in a very similar situation right now, and I'm telling you, the gold is lifting off as we speak. I'd be inclined to be long gold right now for sure, because this, you know, the fact that here's what's going on: the dollar's fallen, and you know, the gold hasn't caught up with it yet, but it's starting to. And now the gold stocks are leading the way, so the whole scenario is turning very, very bullish. And it's, in all likelihood, gold's going to open higher tomorrow, maybe back over 1200, and it could actually be overdue for a very, very big rally. Now, the only thing about the gold is, you know, because it's been so choppy, there is one, you know, something comes out of the left field. There's always a chance that we could come down and test these recent lows that we made. They're only $20 away, you know, 1170, 1165. You know, could that happen? Yeah, anything could happen, but you know, that's about the worst of it as I see it. And if we did make a double bottom, it would just fortify the case of going higher. And you know, look, if the gold stocks are off the lows and the gold makes a lower low, that actually is even more bullish, because it's a kind of a positive divergent buy signal, where the gold makes new lows and the gold stocks doesn't. That's the way these bottoms are supposed to occur. So, and it's just like what we were saying about the stock market. The you know, the last man standing a week ago was the Dow, but look what happened since. You know, it's pretty incredible. We're down over 1,000 points easily. Now we're down 1,500 points almost on the Dow in 10 days, in 9 days exactly. In eight days, we're down 1,500 points. So it's been pretty amazing actually. So the grains are getting hit a little bit, like I was saying yesterday. The grains may be vulnerable to the stock market sell-off. The oil got hit overnight. We sold the oil up around 75. It's 73.30 right now. You know, the storm is so strong. I think the oil is going to have another shot at rallying. But this we have to go back to the short side on the market again.
The things are getting ready to, I think we're going to see a change in Globex ever since I got involved with futures, going back to 2005. Globex was like a shadow market. It didn't really carry a lot of weight, and steadily we've seen it grow in significance and importance. In fact, a lot of days, if you look at the Globex chart, the big move, so to speak, can actually happen now on Globex. So Wall Street's always been thought of as the engine that drives world commerce, but with each passing day, Globex increases its impact on the markets overall. And now with this news out from TD Ameritrade, which I don't know if you saw that.
What are they saying now?
TD Ameritrade night trading. Let me see if I can pull up the article. I did not. Yeah, this should do it. They're going to offer 24/5 trading on select securities. More trading, more hours, more potential market opportunities. With news breaking overnight, today's highly connected world requires a way to react right when the market is moving. 24-hour trading isn't just for derivative traders like us. The same functionality is now available on some of our most widely traded securities. Now, the securities that will be available are FXI. Do you know what that is?
That's a Chinese.
Okay.
Which incidentally is hitting new lows right now.
Okay, the SPY will be one of them. EEM. Do you know what that is?
BEM?
E as in Edward, E as in
Oh, that's
Edward.
the emerging market. Market.
Then we got GLD, SLV,
Yep.
DIA, that's the diamond, that's the ETF that tracks the Dow, UNG.
That's a natural gas, I think.
TLT,
That's the bonds.
IWM,
Mid cap.
QQQ, NASDAQ,
Right.
USO,
Dollar, I think.
and the last
Oh no,
one,
oil. Sorry, oil.
oil, okay, and the last one is SH. I don't know
SH.
Mm-hmm. S as in Sam, H as in Harry. Extended hours overnight orders are 24-hour continuous orders that expire at 8 p.m. Eastern every day. For example, an extended hour order placed at 2 a.m. Monday morning would be active immediately and remain active until 8 p.m. Eastern Monday night. A trade placed at 9 p.m. Eastern Monday night would be active immediately and remain active until 8 p.m. Eastern Tuesday night. Trading after normal hours comes with unique and additional risks such as lower liquidity and higher price volatility. Your order may only be partially executed or not at all. So now TD Ameritrade is a pretty big footprint in the markets. I can only assume that other brokerage firms will follow in their footsteps just to remain competitive. Now, how do you think, because here we are trading the S&P Emini Futures contract. People who know nothing about futures, but who are very comfortable trading things like ETFs, like the Spider. How do you think that will, 6 months from now, do you think we'll see an overall increase in activity on Globex because of this?
Could do. Yeah.
And obviously, we'll see numbers coming out of the Spider and the FXI and all the ones I just mentioned. But I think some of that's going to bleed over into the futures market, and for some of these folks, it might be the first time they actually take notice of the fact that there already is and has been for quite some time trading at night. That whole after hours things with stocks never really caught on. It was like big news when it was announced years ago that I forget what the hours were. It was just a couple hours. It wasn't a lot of participation. I think this is going to be able to trade the Spider at 2 a.m. I mean, I have no desire to trade the Spider. I'd much rather just trade the ES futures contract. But some people are, completely opposite. They want to trade the Spider. So I think we're gonna see a definite increase in participation and volatility and volume and all these things. And then what comes next? Eventually.
Oh, the SH is a pro shares, short S&P 500. Yeah, that's what it is. I don't think it's leveraged. It's just a regular deal. Yeah, I wish if they had some leveraged ETFs overnight, that would be something.
Well, they'll
probably come.
Yeah, they'll let these go and work out the bugs, and then version 2.0 will include probably everything.
Yeah,
and at some point, perhaps even the regular stocks, IBM.
Yeah.
Because it's more and more. I mean, everything's electronic, so just because you're tired and want to go home at 4:30 in the afternoon, that's reasonable.
By the way, this hurricane, remember I said a few weeks ago, the ones they hype, when they get all the hype, it usually isn't. It turns out to be not so bad, right? Mm-hmm. The ones that sneak up on you like this one, they're the ones that end up being the worst. This one's bad, believe me. This thing's, look at the wind speed right now, it's 150 miles an hour. That's a Category 4 storm. That's
and where's it expected to hit land?
It's kind of there. It's just about there, I think. But actually, it's blowing up to 157, right? It's almost hitting under Category 5.
And where's it going to land?
I could tell. When it showed, as soon as I saw those waves yesterday, they showed the waves. When you see the foam coming off those waves and the spray, and you see the wind hitting the spray, listen, I've been at sea all my life, so I know what a really bad storm looks like. And when you see those waves like that, I mean, right away you say, and you never saw that with the other storm. This image last night was the first kind of really severe wind image that we've seen in a long, long time. And what I was saying about the oil, there's probably going to be quite a bit of damage to these oil rigs, platforms, maybe quite a bit outage. So there's a pretty good chance that there'll be a big spike in the energy sometime developing in the next 24 hours or so. Because remember back in 10 years ago when they knocked over that seahorse thing, the rig got knocked over, a giant rig. One of the biggest rigs in the world fell over, and some of those rigs are probably going to be
Deepwater Horizon. Is that?
No, not that one. This was a seahorse. I think it was called Seahorse, and it was either, I think it was a BP rig, and it got it literally, it didn't sink. It was about a 45-degree angle. So given the severity of these winds, there's probably going to be considerable damage to those platforms, and they might be out of commission for quite a while.
And that will have a, well, I guess it depends on which way you look at it, but a positive impact on crude as far as it should push crude prices higher.
Yeah. And listen, the situation with the crude now is really tightening up, and if we end up having a cold winter, which looks like is going to be the case, we could, look at natural gas. Natural gas already broke out. It's only pulling back a little bit today, but the fact that natural gas led this last rally higher is a pretty big deal. And if we in the next few days or weeks, we start hitting new highs in crude, gasoline, heating oil, and natural gas, expect the markets to go a lot higher. So we came down and tested one more time. But we didn't make a low. I don't think we made a lower low on the Nasdaq. So we're actually rallying pretty strongly right now, and the VIXs are selling off again. So, I kind of figure we're going to get a rally this afternoon, and it looks like we're going to get one. But we've only got maybe another hour between now and 2 o'clock or 2:30. We have to see how this afternoon is going to shape up, as to whether it's going to be further down or whether we're going to kind of get a bit of a turnaround here. I got a feeling we're going to have a bit of a turnaround. So we're not down to, in some respects, some of these stocks like Apple, they're not down that much really over the last week or two. And they're you know, with today's, if we did reverse up today, it would be you know, encouraging. However, given that we're down 444 right now in the Dow futures, you know, when we get this far down this early in the day, it's really asking a lot for the market to recover from these levels. And if we break 26,000 on the futures, I think you're going to see 25. You know, you could see down 600 or 700 before the day's out. So we got a bit of a rally right now, but at some point, if we get a resell on it, or it looks like it's going to roll over, I think you got to get out of the way.
Okay. What's the story? What's the story, John? Can you, John? What's the story on Nikki Haley? I mean, I know that she stepped down, but I haven't read the story or heard the story.
You know, I think there's something going on. It's possible that.
Thank you, Bruce.
That. What's the name? What's the guy's name in Carolina, South Carolina?
Michael? You mean our guy?
No, the senator.
Oh, the senator. Oh,
Lindsey
Graham. Lindsey Graham.
Yeah, there's talk of him possibly going to Attorney General, and Nikki Haley would somehow come in and slot in for him or something like that, or get appointed to be senator. You know, that's a possibility.
So is this a bad blood thing? Does she? I got the impression she was trying to distance herself from Trump all of a sudden.
No, I don't think so.
That's not it. Okay.
All right. I don't think so. She's got a very high rating. She's the highest rated Republican, you know, official, if you like. She's got a 67% popularity vote right now, and I think she sees, you know, maybe she's looking at ways of you know, cashing it. You know.
It says here, it's not often that a top-level official in this administration gets away clean and leaves on good terms with the president. When she stepped down Tuesday as U.S. ambassador
This is the Little
to
Flower
the United
Soap
Nations, Nikki Haley became one of the only senior staff members to walk away from the White House with her reputation largely intact. Since Trump's first week in office, the White House has been plagued with high-profile departures of people who are fired or resign, often after being stung by scandal or caught up in some controversy. NSA, National Security Advisor Mike Flynn, James Comey, Rex Tillerson, to name a few. But Haley, who is seen as a stabilizing force within the administration and a frequent spokesperson, left on her own terms with her political credentials preserved. In a decision that stunned Washington and the diplomatic community, Haley announced she would leave by year's end. Oh, so it's not like she's walking out tomorrow. Okay.
Yeah.
President's send-off for Haley differed wildly from typical announcements. He held a press conference inside the Oval Office and spoke about her in glowing terms, declaring that she was special to him. You know, okay, so Haley had been made the UN ambassador a more glamorous position. Oh, she made the position more glamorous than it had been in previous years, so they're crediting her with that. Haley said her tenure at the UN was an honor of a lifetime. It was a blessing to go. But I will tell you that I think it's time. She also lavished praise on Trump's leadership, and so she made clear there was no personal reason for the departure. She thinks government officials should know when it's time to step down and allow someone else in with a fresh perspective. Okay, well, that sounds real good. I don't agree with the president on everything she wrote in a Washington Post op-ed back in September. When there's a disagreement, there's a right way and a wrong way to address it. I pick up the phone and call him or meet with him in person. It became Haley's defining characteristic. So, with all due respect, I don't get confused, Haley said in a written statement. Okay, because Larry Kudlow, had suggested in April that Haley had suffered momentary confusion over the Trump administration's approach to sanctions. And she said, with all due respect, I don't get confused. So she stood up for herself there.
Yeah.
Well,
no, I think that's what's going on. This obviously some kind of thing that she's been set up for. Who knows? You know, he might create some new position.
Possibly. He's thinking about bringing back the previous, whoever held that post previously, he's going to bring her back. That's part of the headline I read earlier. I don't see that in this article.
So,
go ahead.
You know,
what about Google shutting down? They're going to shut down Google Plus.
Yeah, you were talking about it yesterday.
Okay, by August of next year.
You know, they were talking about Ivanka doing that position. I mean, actually, in a kind of a strange way, she might be quite good at it because she can sort of she can handle the incoming, you know. And
I mean,
she's
is that
kind
possible?
of
Would that be some kind of contract?
No, I don't think it's going to happen. But you know, when you think about it, she actually might be. She might. It might, you never know. It could be something there because she could handle it. She might do a pretty good job, because it's, you know, you don't see her doing a whole lot in her current role, even though she does. I think, look, I think right now, anybody who takes that position has got, you know, they've got big shoes to fill, and they've got the certain aura, if you like, of the position where the U.S. is in a get tough kind of mode. And you know, it's kind of crazy to get people like Christian Amanpour. It's amazing how these journalists just make stuff up and they say, oh, how the U.S. is withdrawing from the rest of the world. I mean, nothing could be further from the truth. I think we're putting our foot down around the world in a way that's never been done before, and we're just not going to take it anymore. The results are stunning. As a matter of fact, if you look at the FXI, you might want to stick it up on the board. You know, this really tells you the real story of what's going on in China, and what it looks to me like, if you can put up a monthly or maybe a weekly, is the beginning of a lot of trouble in China. Look at it.
Could you hold for me just 1 second, please?
Sure.
I'll be right back. Okay, I'm gonna have to cut it short here today, John.
That's all right. Look, try and just put up that weekly thing, and I'll finish it off if you can, or if you can go to the weekly or monthly maybe on the chart. I mean, obviously, the situation in China, that chart doesn't look like it's going to reverse anytime soon.
Did you say you wanted me to go to the monthly?
Yeah, maybe a monthly if you can. Can you squeeze it up a bit? Okay, you know, this sort of looks a little bit like the Japanese market in 1989, when it went to 40,000, right? I mean, look at the increase from 2004, right? To, you know, look at the percentage. You get a 500% upside, right?
Right.
And then a huge crash, and really it's been unable to get back up above more than a threefold recovery from the lows. And look at it now, it's got this double top and it's heading down. It tells you that maybe you know, in just the same way as, you know, we thought that Japan was taking over the world in 1989 when they were buying all the buildings in New York, and all the Japanese banks, five of the top 10 banks in the world were Japanese, just like probably 5 of the top 10 banks in the world today are Chinese. You know, they're definitely, you know, it's nothing like the U.S. market. The U.S. market is, you know, several times better than the Chinese market right now in terms of its overall performance since 2009. I mean, you can't even, there's no, I mean, the US market is just above and beyond anything else on the planet. And this is a whole different ballgame, you know. Even though, and look, things aren't that bad in China. They're still making millionaires faster than any other country in the world, and the wealth is definitely growing. But the market, you know, the Chinese market is no, you know, it's not performing. And obviously the Chinese market is telling you that there's a lot of internal problems in China that are probably getting worse right now, and so the outlook is fairly bleak for the Chinese for the foreseeable future.
John, I got to take care of something. If you have more that you want to share, you're welcome to continue sharing. Otherwise, I'm going to put the audience on hold.
No, it's okay. Listen, we're getting the rally, so that's a good thing. Okay. And the VIX is really plunging now, so it's kind of, you know, we might be in for a bigger rebound than we thought, you know, possibly going into Thursday. So, and I think, look, whenever you see the gold suddenly come to life in a day like today, usually means the Fed is in there, you know, buying stocks or something. You know, they're exactly. Okay. Yeah. Okay. Thanks.
Right.
Have a great day, and have a great afternoon, and we'll catch you tomorrow. Thanks a lot.
All right.
Bye.
You too, John. To the rest of the audience, I'm going to put you on hold here for a little bit. Take a break. And I'll be right back, but I have to take care of this right now. So, make a sandwich, walk the dog, and I'll be right back. Okay? All right, sorry about that. Can't promise it won't happen again, but hopefully not. Okay, so we've already looked at the S&P. We dropped 34 points, and then another little spike. Now, that right there, see, we walked sideways. Let's blow this up. We step line, crossed the CFMA1. Did we have a green close above the step line? Not yet. This looks like it will be the one. However, there's 27 minutes left. Oh, you know what? Look at this. It won't point right at it, but you see what I'm talking about, that little corner there. Okay, that is above the step line. I was looking here, but okay, so this came down, and then as this candle opened, we went right. You know, given the fact that yes, that is a close above the step line on the back side of the CFMA1. So if you did not take that as your exit signal, and consider it your exit signal, and that close was 28.44 half, and you can still get out at roughly that price. Now let's look real quick. Let's go to indicators, let's go to volatility, let's go to average true range. Average true range right now with a 14 period look back. So if these were hourly candles, it would look back 14 hours. If this was a daily chart, it would look back 14 days. You can change the look back period if you so desire. Right there. Okay. See, if I change it from 14 to 100, instead of the average candle being 9.5 points, takes it down to 5.5. However, current situation, 9. If this were to be a 9-point candle, it opened at 44. That would close it at 53. That's sort of a worst case scenario. And so now this candle clearly opened above the step line, and we got a close. So that's it. It's official. You know, just take your leave. All right. You had if you exited right there at the close, 28.44.50. We'll call it 45. So 72 minus 45. 27. 27 times 50. $1,350 per contract. Do that math one more time. 872 minus the close of this candle. 28.45. 8.45. Yep, 27 points, $50 a point, $1,350 per contract available. Now the low was down at 34, okay, and then we got to close at 44. This was practically a 10-point candle here. So there we have it. On the Dow. Sorry for the turbulence. Give me 1 second. Okay. All right, let's go look at the, well, okay. On the Dow, slightly different story. Now again, this is one of those situations where you have an exit signal, but because of the dynamics and the amount of your, if you entered at 872, you've got a substantial gain. You have the luxury of being, you can be patient here to see what happens with this candle, because such a close call, right? The Dow did not confirm. Let's see about the Russell. The Russell has definitely given us an exit signal. We talked about the Russell potentially leading to the downside. Well, if it's leading back up, now keep in mind this rally right here, once we hit the BBC, yeah, we could rip right through it like it's not even there, but chances are we'll get at least an attempt at another leg down. Leg, retrace, leg. Where will that happen? Well, when you pull your fibs, the BBC is right between the 50 and the 62. Okay. So the Russell, your exit signal was 1606.60. From 18, the market told you to get out. Not some guy on the radio, not some talking head on TV, not some fancy indicator, oscillator, crystal ball. The market said get out at 1606.60. Okay. Crude oil, we've got an exit signal there. Okay. So the only laggard is the ES, and it actually gave one. I'm just not sure it's done. Oh, hang on. Remember, step line's got to cross, then the green close. In Q, no question, we crossed and got a green close, and the exit signal came at 72.49. Gold, there's just not much there. And bonds, this was a 4-tick move at 31.25 a tick, 120 bucks, but most likely just a stop out. And then soybeans, soybeans gave their exit signal at $851.5. 850, call it 852. So from 58 to 52. No, you don't get out at the swing low. No one does, except by accident. But you got out at 852. And that's a 6-point move in beans at $50 a point. That's $300 per contract. You did good. You did good. Okay. So anyway, about the S&P, if you took your exit there, good for you. You had a great trade. Congratulations. Fantastic. Interesting how the S&P wants to continue to push down. Oh, now here comes the Dow. Okay. We got no exit signal on the Dow. And now the Dow is putting in, attempting to challenge the low. If we close this 30-minute candle below, after the walk and the doji, if this market closes below 2600, we could be in for quite a doozy, as they call it. The Russell's to be believed, it's going to all turn around here. But I'm Mr. Wait and See. Now the NQ, what a from 73.64 to the exit signal. The exit signal was 72.49. 72.49. So 364 minus 249. It's 115 NASDAQ points at $20 a point. It's $2,300 per contract available. 2,300. And that's all, folks. I got to run. If you have a question, put it in the chat box. If we have a mentoring session this afternoon, I'm going to have to, I'll send you an email. We'll postpone that until tomorrow. My apology, but something came up and I've got to take care of that real quick. Are there any final questions? If you got any question at all about anything at all, I'd be more than happy to answer it before I depart. All you got to do is type it in the chat box. Nobody sees what you type in the chat box but you. Good word for the day. How can the ark of the Lord come to me? 2 Samuel 6:9. In the Old Testament, the most recognized symbol of God's presence was the Ark of the Covenant. Wherever the ark was, God's presence was there. But Israel allowed the Philistines to steal it. There's an important lesson here. Satan is out to rob you of your sense of God's presence. Israel lost the ark for one reason: disobedience. They made lots of sacrifices, but disobedience cost them the ark. What is God telling you to do, or what is God telling you to stop doing? He won't negotiate, compromise, or overlook disobedience. You must deal with it before you can go forward. David asked this question: how can the ark of the Lord come to me? Because every effort to bring it back to Israel had failed. Somebody suggested putting it on a new cart. Someone else suggested they get Uzzah, whose name signifies strength, and Ahio, whose name denotes brotherliness, to drive the cart. Most people thought this was a great plan. God didn't. So much for people's opinions. David had the best of intentions, but they didn't line up with God's will. God had already told Israel that the ark must be carried on the shoulders of anointed priests. In other words, by those who knew how to A, walk in balance, B, walk in love and unity, C, walk in obedience. Are you getting the message? If you treasure God's presence in your life and want to protect it, apply these principles. 2 Samuel 6:9, how can the ark of the Lord come to me? The answer is obedience. Obedience is greater than sacrifice any day of the week. Okay, I'm going to leave you there. Today is Wednesday. Tomorrow we have our workshop tomorrow night. Michael, if you're on the trial, Michael should have sent you an email which tells you how to become a partner, a passport holder, whatever your desire. We're here to serve. If I can be of help, call us. 949-423-6464. Easy to remember, 949-42-EMINI, or shoot an email to support@cfrn.net. All right? So there you have it for this Wednesday, the 10th day of October, 2018, 10/10/18. Thank you so much for tuning in today. Wherever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.